Money Differently podcast is brought to you by Acorns. I've been using Acorns as one of my investment accounts for several years now. It's ridiculously easy to use. Imagine every time you pay for a latte or hit up the drive-thru and your spare change is silently working in the background, turning your pocket change into ownership of great stocks of the companies you likely do business with every single day. You can also set up weekly or monthly recurring investments with Acorns, which puts your wealth creation on autopilot. Be sure to click the link below in the description of this episode so you can get a $40 bonus when you open up your first Acorns investment account. You'll be happy you started your new investing journey with Acorns. Welcome, everyone, to Do Money Differently podcast. This week's episode is just me. And from time to time, I'll be on the episodes by myself, but sometimes I'll have guests in a variety of industries, talking money, talking investing, talking how to become financially rebellious, financial rebellion, how to really begin to do money differently, teaching you things that likely you'll never be taught anywhere you go, whether that's high school, college, post-college, you name it. Again, my name is Todd Romer. Happy to be on today to give you some interesting information when it comes to taking the scary out of investing. And so you think, well, what do you mean? What do you mean by taking the scary out of investing? Well, I have had the honor and privilege and blessing to speak across the country for several years. And the number one interest I get everywhere I go from young people age 18 to 29, no matter what state I'm in, no matter where I'm at, I don't care if it's a 4-year prestigious university or if it's a community college student athlete, I really don't care who I speak to because the content is impacting people from all backgrounds. But the number one interest I get everywhere I go is investing. How do I get started? Can you help me safely and securely begin investing like the wealthy do? Tell me more about investing so I don't feel so intimidated and overwhelmed by it. Well, in order to take the scary out of investing, which I will do in this podcast, is I just want to have you look at what's going on in the stock market today. So this is April 18th, when this will be on the platforms, the podcast platform. So that's the date, April 18th, 2025. And the stock market's been a roller coaster ride, right? You would be very much having to live under a rock if you didn't know the last couple of weeks with all that's going on with tariffs that the Trump administration is doing for countries and all of that chaos. Not a political statement. I think over time it's going to play out positively for America. But in the meantime, it's a lot of uncertainty. And the stock market does not like uncertainty. That's for sure. So whether that's the tariffs, the interest rate debacle right now, should the Fed lower interest rates, that is not my wheelhouse. That is not what I do. I was not an econ major. That's for sure. Thank God, actually. I appreciate those who were. I know a few people who were. It's good stuff, but that's not my wheelhouse. Whether it's concern about the AI race between China and America, consumer sentiment, consumer spending concerns right now, the debt levels of Americans. In fact, that's a big deal these days, and just kind of trying to figure it all out. So with all of this chaos has come from a lot of people, young people especially, saying, should I start investing right now? It sounds scary. It feels like a lot's going on. The market's up, 1,000 points one day and down 2,000 the next. So we'll cover that for sure, so that at the end of this episode of Do Money Differently, again brought to you by Acorns, you're going to have this level of comfort, like, yeah, I can invest. I can start doing this. Why am I afraid? There's no reason to be afraid. So Let's start with the history of the U.S. stock market. All you need to know, you don't have to go to some prestigious Ivy League school or some expensive state university to learn about the history of the stock market and why it's important to start investing ASAP. But here's the history of the stock market. Been around for over 150 plus years. That's over a century and a half worth of time. And all kinds of things have happened in the United States, certainly internationally. We've had global wars, we've had pandemics, that's plural. We've had all kinds of geopolitical events. We have had different countries being run by different regimes, some overtaken, some have taken on a new way of governing. We have had internal strife in America. It seems like the last 30 years, every 4 years, the election is a big deal. So it doesn't matter really what's been going on internationally in the country the last 150 plus years, because frankly, the stock market has seen it all, the good, bad, and ugly on both sides of the aisle. And again, frankly, the stock market doesn't care. It says, jump on my train, I will take you to wealth. And here's what I mean by that. So during the 150 plus span that the US stock market's been around, the average annual rate of return from the stock market as measured by the quote S&P 500 index, which measures stock market performance of 500 largest companies in the United States in a variety of industries, from healthcare companies to retail companies, technology companies. Um, gosh, there are so many niches, builders, pharmaceuticals, you name it, all variety of industries. The stock market has returned amongst that group of 500 stocks an average of 10.2% per year. Let me repeat that. The average annual rate of return the stock market gives investors over a century and a half worth of time is running at just over 10%. Now, the last 55 years, it's running closer to 12% annual rate of return. So you can't get that inside of a bank or a credit union savings account. And that's why there are trillions of dollars still invested in the US stock market. So that's some history for you. And as I look at my notes and what I want to share with you today in this episode of Do Money Differently, let's talk about the type of investments that are available to you. And when young people come up to me, both young women and young men, they say, hey, what is the best investment for my money? Where should I start? And they mention things like real estate. They certainly talk about stock market, and I'll talk about that in a moment. But let's look at the general options that we have as human beings to invest our money to make it grow. Yeah, real estate has had a very good long-term rate of return. That's been pretty obvious the last, 15 years in residential real estate, even though not just me, but a lot of people think it's just irrational growth and it's not really healthy to have that kind of upward trajectory like it has for just simply owning a home. But that's for another podcast on real estate and bringing other people who are smarter than me to talk about real estate investing. But let's stay with real estate as one investment option. You and I both know that you need to have a decent chunk of change to even begin owning a piece of real estate, whether that's an apartment building, which is great, right? To own an apartment building and have rent income coming in per month. And certainly there's expenses to that, but you've got to have literally hundreds of thousands of dollars to own an apartment building today. Let's look at owning a small starter home. Maybe you want to flip that. And that was a big deal 20 years ago, flipping houses, right? Okay, well, you still need tens of thousands of dollars to put a few percent down payment on a home if that's how low you want to go. So real estate really is out of the game for most young people to start investing. Perhaps later on, that's great as an option, but that's one. So real estate, maybe the second investment is investing in a business, investing in a startup company. Maybe it's a local restaurant chain that's wanting to expand into other markets. And well, that's still going to cost you a lot of money, tens of thousands of dollars. Maybe a franchise that's going to cost you tens of thousands of dollars. So that's kind of like, well, that's not it for me. If you're a young person trying to accumulate wealth, the next one would be government bonds. You can do that. You can buy bonds for a young person. Highly do not recommend that. Highly. Um, just because the rates of return right now, 3 to 5%, something like that. And that's just not what any financial advisor would tell you either. What else? We got gold and silver. Maybe you invest in gold and silver or collectibles. Well, that's fine and an option. And I am a fan of gold. In fact, it's doing very well the last 5 years, significantly well the last year and a half or two. So that's an option. Sure. But that's again one asset, putting all your eggs in a gold basket or a silver basket. You can invest in art, kind of collectibles too. Take some money to invest in some art or paintings. I don't know anything about that stuff. Um, then the rest of the investment options come down to two more. One is crypto. I'm a fan of specific cryptocurrencies, especially Bitcoin. I own a decent chunk of Bitcoin, and I think it represents digital gold, digital real estate. Again, I listen and kind of follow a lot of people much smarter than me when it comes to cryptocurrencies and especially Bitcoin. I just think Bitcoin makes sense to have as part of your overall investment portfolio. And I happen to like a cryptocurrency called Chainlink as well. I owned a few other cryptocurrencies back in the day. Ethereum did pretty well, sold on that. XRP recently sold some XRP, but right now I just own two cryptocurrencies, Bitcoin and Chainlink. So now let's get to my favorite investment vehicle, which is the favorite investment vehicle of millions of Americans and where I believe it's a money-making machine over time, and that is the U.S. stock market. So I want to kind of tell you quickly now about how do you make money in the stock market. If you're a beginning investor, if you're relatively new, maybe you have some stock from your grandparents that they gave you for gifts or your parents, and you just kind of like, well, yeah, I have money in stocks. I think it's in a mutual fund. And all a mutual fund is a collection of 100 and plus individual stocks. It's a basket of stocks. It's smart. So you're diversifying that way. But I just want to share with you a couple of things to help you take the scary out of investing. Again, Do Money Differently, sponsored by Acorns. They have these portfolios, and the stocks inside of those portfolios that they have provide two ways to make money owning stocks. The first one is share price appreciation. That simply means, and you know this, hopefully you have a stock that goes up over time. Buy low, sell high. If you buy a stock for $24 a share, you hope it goes up maybe to $30, maybe to $40, maybe more over time. And as I've shared, with the historical rate of return of good, solid companies inside the S&P 500 index has shown that that does happen over time. Stocks do go up. The second way that you make money owning stocks that most young people do not know about, and it's why we're thrilled to have the following that we have and all the things that we're doing within Young Money University and what we're planning to help more people do what the wealthy do. The second way you make money owning stocks is through receiving dividend income. A dividend is simply a share of profit that is paid out by the publicly traded stocks that you own, publicly traded companies such as Coca-Cola, Walmart, Verizon Wireless, AT&T, Procter & Gamble, who makes all of your detergent, soap to clean your clothes. They own Gillette brands for when you shave. Procter & Gamble owns a ton of retail products that are sold inside grocery stores everywhere across the world. Companies like Apple, Microsoft, Google, Netflix, the list goes on. These companies, most of these companies pay a quarterly dividend. That means, again, they share their profit with you every quarter based on how many shares of stock you own. Some pay a dividend equal to 1 to 2% of what you have invested into their company, just paid out quarterly, 1 to 2% per year of just free cash given to you because you're an owner of their company. You own their shares of stock. Some companies like Verizon Wireless and some other telecommunication companies pay out a higher dividend, anywhere from 5 to 7% per year, just in the form of dividends, sharing their profits that they make. So I remember, and I still do this, when I walk inside a company that I do business with, I go, God, it would have been pretty cool to own this company back in the day. And what comes to mind, frankly, still is Chipotle. Chipotle, what a simple system of receiving pretty darn healthy food, right? Fast casual. You don't have many options to confuse you on the menu. It's boom, 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 right? And you're out down to the cash register within about, I don't know, 40 seconds from the time you say, I'd like to have a bowl or a burrito. And, you know the drill. If you've been at Chipotle, it just takes 40 seconds. You're pretty much out of there and away it goes. I would love to have been an investor of Chipotle, that publicly traded stock back in the day. So, in summary, how you make money owning stocks and how you create wealth over time with the US stock market is dividend income and share price appreciation, having that stock go up over time. And then now I want to share in this episode of Do Money Differently some crazy numbers with you. And if this doesn't fire you up to begin investing ASAP, I don't know what will, because these numbers and these facts simply don't lie. I'm going to share with you some compound interest examples. And if you are not following me on TikTok under Todd Romer, I will highly recommend that you do so. It's been kind of fun. We've only been out on social media for about 6 or 7 months. And within weeks, we had a video go viral. My son and his fiance are running my social media, doing a great job. And I'm on the golf course. This is a quick story before I share these crazy investment return numbers with you. But a few months ago, I'm on the golf course, maybe about 4 weeks after we launched on TikTok. And my son Alex says, he calls me on the phone. I'm with my buddies on a annual golf trip. I answer the phone. I said, hey, what's up? He said, hey, Dad, you got a second? I know you're golfing. I go, yeah. He goes, one of your videos has gone viral. And I said, okay, I know what the word viral means. I know what that means, but I have no idea what it means in terms of numbers. And by the way, we shot a lot of videos. Which one of the videos went viral? He said, the one where you say the greatest side hustle of all time is compound interest. And I said, oh, really? I kind of laughed because I said, well, you won't believe this, but I did that video out in St. George, Utah on a whim because I know I need to get some more videos done. And I was walking through a parking lot. It was actually a parking lot of a funeral home because it had a kind of cool, decent background. Not the building, but just the St. George, Utah background, I guess, the neighborhood. And I said, well, how many views is viral? He said, you're at about 250,000 within 24 hours. I went, you serious? And he goes, yeah. So that video to this day is just under 800,000 views, and it's the truth. And I'm going to share these examples of why the greatest side hustle of all time is compound interest. So here we go. If you invested $200 a month in the US stock market in a mutual fund or ETF, which Acorns can put you in as well, for 20 years. So again, $200 a month coming out of your checking account, just like a car payment, into your stock mutual fund or ETF, exchange traded fund. $200 a month invested for 20 years at an annual rate of return closer to 12% per year, which is what we're using of 55 years worth of the last time of the stock market. Your total contribution was 48 grand over that 20-year span. 48 grand is what you invested. Well, it turns into $200,000. You just set it up in 5 minutes on, maybe it's the Acorns platform, and 48 grand turned into 200 grand. Well, that's example number one. Not bad, right? It gets better. What if you invested $200 a month in the stock market for 40 years? Same 12% ROI. Your total contribution was $96,000 over that 20-year span. And that turned into, the next 40 years, that 96 grand turned into just under $2.3 million. You heard that right. You set it and forget it. Let's look at a different example just to show you how time is really doing the heavy lifting. You saw that time is doing the heavy lifting in the last example. $200 invested for 20 years is about 200 grand. But if you invest that same $200 for 20 more years, a total of 40 years, that extra 20 years skyrockets that money to $2.3 million. That's the craziness of compounding. But let me share another example. $500 a month invested in the U.S. stock market for 9 years. That will then be 100 grand after 9 years. Another example, that same example 4, that same $500 a month invested in the stock market for 15 years, so not 9 years, 6 more years, that $500 turns into $250,000. Just that extra 6 years bumps up the acceleration of money turning into ridiculous amounts of money. In another episode of Do Money Differently, I'm going to be going through the multiple investment accounts that you'll have, at least 3 over your lifetime. It can be a lot more. I have 6 investment accounts. I have a crypto investment account. I have other stock investment accounts as well. But I wanted just to have you all see that the stock market is not scary. It's why there's trillions of dollars invested in the stock market each and every day by millions of Americans. And they're not dumb to be doing this, because history has shown you're looking at a 10 to 12% annual rate of return. You know, our sponsor Acorns has been around for several years, well over 10 to 12 actually, and they have billions of dollars of people's investment money, including mine. I highly recommend that you check out the link in the description of this episode, and you can get a $40 bonus to start investing for the first time with Acorns. And this is what we are big fans of as well. This week's podcast all about taking the scary out of investing, sharing some real life compound interest returns, and you can do this like anybody else. We will be back at you next week with the next episode of Do Money Differently, brought to you by Acorns. Have a great rest of the day and rest of the week, wherever you find yourself.